What's up, millennials? In exchange for your time, and hopefully you like as well, today we're going to talk about the valuation of EVBox, which is an EV charging company that's going to be acquired by a SPAC with a very long name that is trading under the ticker symbol TPGY. Now, before we start, two things. First of all, Stock O'Clock. These are videos that I post every single trading day right before the market opens. These are very short videos with news about the stock market, always videos of about 1 minute long. And the second thing that I want to tell you is never trust me, always verify me, right? I could be completely wrong. I'm just a random dude on the internet. My calculations could be wrong. My assumptions could be wrong. I'm just providing you with information that I believe to be useful. So keep that into your mind. Cool, let me first give you a very brief introduction of EVBox. So as we've said before, EVBox is an EV charging station company, which is based in the Netherlands, which is actually the country where I live. It's a little bit like the European ChargePoint, right? It's a stock that's today actually up more than 100%. If we quickly go to TradingView, we can see that it's up 102.7% already, which is quite insane. For full disclosure, I actually bought a small position at $23.30. And also, just to notice, just to tell you, I had another video planned, but I simply wanted to push out this one first, and I might even publish this a little bit earlier than I normally would. Also, I'm a little bit in a rush, so I'm very sorry if I go over things too quickly. I'm going to do it a little bit more freestyle today as well, without a lot of preparation, so keep that into your mind. And be extra careful today, because if I'm in a rush, then it's more likely that I'm going to make mistakes, but I'm trying not to, all right? Let's start. Let's first take a look at the pro forma market cap and the pro forma enterprise value. And for that, we're going to take a look at the investor presentation, which is published on the website of the SEC. I'll link that one in the description below. One thing that's interesting, by the way, is that SPAC IPO investors are going to get 25% of the beautiful pie. So that is quite interesting. Usually that's quite a bit lower with SPAC. So I think that's pretty cool. So we're going to take a look at the market cap and the fair enterprise value, or first the normal enterprise value, the pro forma enterprise value rather. For that, we're going to take a look at these numbers over here. We're going to take a look at the numbers in the dollar column. That's something we have to take into account for today, because some numbers are going to be in euros, which we will have to convert into dollars instead. So we have an illustrative share price of $10, which I put in my Excel sheet over here. The total amount of shares outstanding after the merge are going to be 139 million, which is also the number that I've put in my Excel sheet. And that gives us a market cap, or an equity value as they call it, of almost $1.4 billion, $1.394 billion. And if you take into account that they're going to have $425 million in cash on their balance sheet, we can simply take the market cap of 1.4 billion, take out the amount of net cash, and that arrives, or that gives us, an enterprise value of $969 million. Now, the next step is going to be to look at the future valuation, and we're going to do some very similar calculations as we have done with ChargePoint in previous videos. We've done multiple videos about ChargePoint, and for those videos about the valuation of ChargePoint, we looked at revenue numbers of 2026. Now, for EVBox, we don't have revenue numbers of 2026, so we're going to estimate these based on the growth of ChargePoint instead. As we can see in the investor presentation of ChargePoint, well, we have here the predicted revenue numbers of ChargePoint up to 2026. And I've taken these numbers and I've put them in a calculation in a spreadsheet as well, right over here. As we can see, from 2024 to 2026, I've simply copy-pasted the same revenue numbers as we've seen in the investor presentation. And I've taken a look at the year-over-year growth between these numbers. So here, for example, we can see that the difference between 2021 revenue and 2020 revenue is 46.7%. And I've done that for each single year. And as we can see, well, for EVBox, we have predicted revenue numbers up to 2023, right? So we kind of need to predict the rest of the numbers up to 2026. So as we can see, in 2024, the revenue is expected to grow around 63.5% year over year. The year after that, 45%, and the year after that, 45% as well. So I would say that more or less the average of these numbers is about 50%, right? So this is the number that we are going to use to calculate the predicted revenue of EVBox as well. First, let's take a look at the revenue numbers, the predicted revenue of 2023 for EVBox, which, as we can see in the investor presentation, is 372 million euros. Keep that into account, these are euros. So the first thing that we're going to do is go from euros into dollars. The exchange rate right now is almost, 1 euro is almost $1.21. So we're going to multiply this by $1.21 as well. And that gives us a expected revenue of about $450 million in 2023, right? So this is the number that we're going to use for 2023. We want to go up to 2026, and we just decided that we're going to use a revenue growth of 50% year over year. So this is for 2023, but if we multiply this by 1.5 because of the 50% revenue growth year over year, we would arrive at a predicted revenue of 675 million in 2024. For 2025, it will be a little bit more than 1 billion, and for 2026, it will be 1.5 billion more or less, right? Then for the valuation of ChargePoint, we used revenue multiples of 4 to 9x for 2026 revenue, as we can see in the investor presentation of ChargePoint right here, 4 to 9x 2026 revenue. So we're going to do the same for EVBox as well. We just calculated that the expected revenue of 2026 is going to be around $1.519 billion. So we're going to use that number, 1.519. And we're going to first multiply that by 4 to get a low valuation, a future valuation of $6.076 billion. Very difficult to say that. I've already put that into my spreadsheet as well. And the 1.519 times 9, the other revenue number to the other revenue multiple to arrive at a high future valuation is going to be $13.671 billion. And then we're going to add one more valuation, which we're going to call the midpoint valuation, which is basically the average of these two numbers, the low valuation and the high valuation. And then we would arrive at a future midpoint valuation of $9.8 billion. The next step is going to be to discount the future valuation and discount that back 5 periods at a certain discount rate. First of all, the discount rate, we're going to use the same one as we used for ChargePoint, which was 15%. And we're going to discount it back 5 periods because we were looking at revenue numbers from 2026, and we need to discount that back 5 periods to arrive at 2021, which is the year in which we are almost living in. So let's take our future low valuation first of 6.076, and let's use the formula to discount it back at a discount rate of 15%. So first of all, we divide it by 1.15, the 1.5 at the end standing for the 15% discount rate. And we're going to do that for 5 time periods. And that gives us a discounted valuation, a low valuation of $3 billion more or less, $3.021 billion. So let's do exactly the same thing for the high valuation, 13.671, which was the high valuation of 2026. And we're going to apply exactly the same formula, 1.15 to the power of 5, and that gives us a discounted high valuation of $6.797 billion. And then again, if we take the midpoint, which is simply going to be the average between these ones, the midpoint valuation is going to be $4.9 billion. And then the last step, which is only going to be to calculate the fair market cap and the fair price per share, which is going to be quite easy because we simply take the enterprise value, the discounted enterprise value, and we are going to add the amount of net cash. So that gives us a midpoint fair valuation of $5.3 billion, a fair market cap, if you will. And we know that, well, market cap is the price per share times the amount of outstanding shares, right? We already know the market cap right now, 5.3 billion. We know the amount of outstanding shares, 139 million outstanding shares. So the only thing that we need to do now is to take the market cap, $5.3 billion, divided by the number of shares, $139 million, and then we would arrive at a fair midpoint valuation, fair price per share, if you will, of $38.37. And if we're going to look quickly at the valuation, the low valuation, it would be $24.79, and a high valuation of $51.96. All right, so there you go. A fair midpoint price per share would be $38.37. Before you leave, 3 things. First of all, I would like to know what you are going to do with TPGY, the stock, and also with EVBox, of course. Second thing is always verify me, never trust me. I'm just a random dude on the internet. Third, check out my stock o'clock videos, these short videos, the short news videos that I was talking to you about. And with that being said, thank you very much for watching. Have a very great weekend, and I'll see you in the next one. Bye-bye.